Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
Until October on this daily chart, we had seen a continuation and resultant move lower from the February to June diamond pattern. The primary target for a move down from the diamond pattern was down to the 156.35 zone, which prices achieved in mid-August. I have since retired the secondary harder to reach target down in the 141.80 zone. Okay, so in September and October, a couple of bullish patterns started to emerge. These consisted of the weekly key reversals up in mid-September and mid-October, and again 2 weeks ago. The mid-September pattern caused a rally that eventually ran out of steam, a little short of the medium moving average, currently 157.65. The mid-October pattern punched up through the short medium moving average, currently 156.90, as well as the declining medium moving average, the first time that happened since June. Since then, prices have stabilized, and I raised a question last week, and as a result also a caution about two significant resistances. The question was whether the October to date rally is indeed a bullish halfway hesitation. So far this hasn't been adequately answered, but if it were to be so, then we might look for a target up in the 181 area. I will again not designate it as a target as yet because of the two overhead resistances mentioned earlier. Now these are, firstly, the flatlining long moving average, currently 169.80, and above that the significant congestion from the 50% Fibonacci line of the May 2019 to February 2022 move at 174 even, with its nearby partner the August 2021 low at 174.5. These are not all there is on the top side, as we have further important overhead resistances further up, which I'll detail. 3 weeks ago, the long moving average capped the rising market, turning the market lower, and assisted in forming this very possible bullish halfway hesitation I have discussed. Plus, it led to the weekly key reversal up 2 weeks ago, and in a roundabout way to October's monthly key reversal up. Now, prices did punch up and close multiple times over the long moving average, but it did not breach the combination of the 50% Fibonacci line of the May 2019 to February 2022 move at 174 even, and its nearby partner, the August 2021 low at 174.5. Indeed, prices were pushed down below the long moving average today as a direct result of these overhead resistances, and it's taking all of today's actions to recover above the long moving average, and it's looking at the moment like a possible, not only a bullish closing white Mariposa, but a possible bullish piercing line pattern, but it's still some time to go towards a close. Anyway, this directly threatens the idea of the bullish halfway hesitation, and we saw closes below the long moving average in sufficient numbers. If we saw closes below the long moving average in sufficient numbers, then this bullish halfway hesitation idea would be dead. So if we see more closes or any significant closes below the long moving average, bullish halfway hesitation idea is dead. However, we see a recovery today, so it's opportune to discuss further overhead resistance, and these are the next three. They are the 50% Fibonacci line of the June 2020 to February 22 move at 171.45, the 2016 high at 179.55, and the neckline highlighted in green of the January 2020 to April 2021 reverse head and shoulders bottom, currently 181.25. I have no favorites amongst them, but I do find the neckline interesting. However, should prices fail and turn low well below the long moving average, the 168 even high is the next support, though how strong it is debatable. The next support below that is a bit weak and in a band of congestion between approximately the 165 even zone to 157.65, with the best support seemingly at the 159.30 2017 high down to the medium moving average, currently 157.65. I finally note that we may soon have a golden cross of the rising short medium moving average, currently 156.90, moving up over the medium moving average, currently 157.65. London coffee. The influential pattern of the moment here is one I mentioned 5 weeks ago. It is the June to date bear channel, currently 2138 to 2500, which is highlighted in green on my daily chart. The market has today moved up, utilizing the rising long moving average, currently at 2395, as a base, as well as the flatlining short medium moving average, currently 2402, along with some Fibonacci and other congestion between 2405 to 2411, for a try higher over declining medium moving average, currently at 2451, plus congestion at 2468 and up towards the upper bear channel line, say currently at 2500. Last week I said, and I quote, "Personally, I have my doubts about the long moving average, and right now do not regard the short medium moving average as effective as resistance or as a support. Instead, I'd look a little higher up at the declining medium moving average, currently 24, then back 2467 it was, but now at the moment it is 2462. As a more effective resistance, as though it was breached in late October and mid-September, it worked well with the upper bear channel line in green to cap the rises," end of quote. Well, as resistance since last week, all the moving averages have failed one way or another, though as support, the long and the short medium moving average have been useful. The medium moving average has been penetrated today, so it's up to the upper bear channel line, a previously breached resistance, to show its worth as resistance. As today is leading up to what seems to be a combined key reversal up and bullish engulfing pattern. I will be very interested to see what happens next. Meanwhile, just taking a quick look below the long moving average, I keep an eye on the combination of 50% Fibonacci line of the November 2022 to June 2023 move at 2284, as well as the nearby 2017 high at 2279.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.